welcome back. People may be spending a lot of money today, but some may slow down if they took a look at how their stocks are doing. Here to talk about the markets is certified financial planner Eric Foster. Let's first begin with a look at the Dow.
Sure. So the Dow, S&P, New York Stock Exchange are now have red numbers in them. So most U.S. major markets are down. If we look at the Dow in particular, Dow is 30 companies. So of the 30 companies, 12 are down, 18 are up. So that tells you that it depends on what you own as to whether you're making money or losing money. So you have companies like Goldman Sachs is down 25% year to date, whereas companies like Merck and Microsoft have had really good years. So there are less companies down, but the overall thrust has been a little bit lower so far.
Not the best news right now. Well, what about the strength of those technology shares? We like to hear the FANG, as we call it.
Right. So FANG, I've done this segment for a while, and technology has been the theme of every time I get asked what's working. Technology has generally been the answer. So here for one of the first times, we can say technology has not been working. Those original FANGs, Facebook, Amazon, Apple, Netflix, Google, were at near all-time highs in the summer and have all declined between 20 and 40% over the last couple of months. So maybe some of that air has come out of that balloon. Still great businesses, and I don't think that those are businesses that are going to go away. But they did get to a point to where everybody wanted to own them. They were super popular, and a lot of times that's not the best time to invest your money.
Definitely. Now, businesses keep building even when the prices decline. Why would that happen?
Sure. So in a year that's generally down, more things down than up, one of the things to focus on as an investor is there's a famous quote that gets tagged to Warren Buffett. It's actually not a Warren Buffett saying. He just made it famous. Is that in the short run, the stock market is like a voting machine, and the long run, it's a weighing machine. So voting machine being popularity. So what is popular today oftentimes gets higher prices. Technology, the stocks we just talked about, the FANG stocks, super popular this summer. Whereas in the long term, more of, well, what did you actually do? Did you make money? Did you pay a dividend? Did you pay down debt? That weighing machine begins to take over. And I'll use a real quirky example of Bitcoin. Bitcoin, the darling investment of 2017, up multiple 1,000%, is down 70% in 2018. So that's going to get all the press. But I saw a story this morning that prompted me. Wall Street Journal reports that the state of Ohio is going to start to allow you to pay tax payments in Bitcoin. One of the biggest arguments against Bitcoin has been that you can't use it to pay taxes. That's kind of an old test to say is it a legitimate currency or not. So the point is that while the price action of Bitcoin and stocks in general this year is negative, that good businesses keep evolving, building their story. Bitcoin, for its craziness, is obviously evolving, and interesting things to watch.
Yeah, changing the game for sure. Interesting insight there. Thank you so much, Eric. We appreciate it.